Good morning, folks. It's been a fair week with some unexpected happenings across the world. So today I'm going to be speaking to you about what's been happening to the global bond market, and then we'll move on to how the composition of retail borrowing in India has been changing and how it is important for us to take note of, and the significant geopolitical events that have happened in Asia, and then how it is taking the world by storm, and about an Indian company called Bharat Forge, which is taking a very different turn in its planning. Okay, so very strangely, the last week we saw bond yields going up in all the major economies of the world. We started noticing this with the American 30-year bond, and even before that, in the earlier week, there were the signals coming from the UK and the French long-term government bonds and the Japanese government bonds. And you have eventually the largest economies of the world where actually we were thinking that rates should be dropping. The possibility that the Fed in the US will cut rates sometime during the year had gone up to 96%. And in the face of such a probability, to see bond yields fall, bond prices fall and bond yields go up to such an extent was quite a shock. So why did this happen is a big question. All right. Multiple reasons, as always. It cannot be just one reason. But broadly, one could say that the possibility of Fed losing its independence with Trump trying to wrest majority control of the FOMC did disturb the markets, because the independence of the central bank is critical to maintaining a sane monetary policy. And the Fed being the largest, its policies impact the rest of the world. But that is only one of the factors. The other underlying factors have been rising fiscal deficits. And this is something that you'll see common to America, UK, and France. In all these countries, fiscal deficits have been rising at a rapid pace, and the markets naturally know that then the governments are going to be borrowing far more than anticipated. And given the higher risks on the table of inflation, etc., the markets are going to be demanding a higher rate of return, that is the yield that they get by lending to the government of US or the UK or France or Japan. Japan is also facing inflationary issues, and the scale is something that is crazy, especially Japan. Hardly 5 years ago, the rate of interest in Japan was close to zero. And today, it is 3% plus. The government bond yields are trading at 3% plus. So that is a huge multiple of increase in interest rate. This means that the government has to spend so much more money in paying interest on its borrowing, and Japan is one of the countries that has a very high debt to GDP. Okay. Now, coming back to the US, with the 30-year bond touching almost a 5% yield, and the UK bonds going back to a multi-decadal high, so with France, there is a lack of confidence in the ability of these governments to manage the fisc. So how does this matter to us? Well, in one way, the reducing confidence in the US Fed because of the threat to its independence has taken gold prices higher. And the year to date, of course, gold has outperformed, amazing 30% plus gain this year, and continues to do, having the same demand. While many of the Asian countries, the global south, emerging markets, etc., have been buying gold, somehow the Western world has not been buying gold to that extent for a long time. If you can track the changes in the ETF flows, you can see that while gold price has been going up, ETF holdings have not been going up in the Western world at the same rate. It means that the view on gold in the Western world and the other countries was quite different. Even retail investors in India have been buying gold heavily over the last couple of years. So the change in perspective, the difference in perspective is very stark, but we do think that it is changing in the Western world and they will be buying more gold as we go ahead, and silver also. Now, with the bond yield in the US going up, what does it mean? It means that the risk-free rate of return, so to say, is higher outside in the US than it was a few months ago. At the same time, the gap between the yield on an Indian government security and a US government security has reduced. Earlier, the gap was large, so you could earn a much higher rate of interest by lending to the Indian government as compared to the US government. Okay? And the higher return made up for the risk inherent in buying an emerging market debt. With the gap reducing, a lot of foreign institutional players are going to think that the risk premium in buying an emerging market bond such as India's is the extra return is not justifying the gap that is there between the two yields, and you will see probably lesser inflow into government bond yields. Okay, you're also going to see a weaker currency because of that, because of lesser flows into government bond yields into India. These are possibilities. The Indian rupee has already weakened a fair bit. Okay. So this has, I mean, if you stretch this argument, it could happen that imported inflation would go up eventually. It could happen that the cost of borrowings for Indian companies go up. But all this, I think, if you stretch this, if the situation continues for a longer period of time. But as it stands, we have not seen major economies, bond yields shoot up like this for a long time while central banks are trying to bring rates down. Okay, the risks are growing only higher and higher in the debt market. It is one thing to keep note of. Okay, another very interesting article in the Mint on Thursday was speaking about how retail borrowing in India has changed. Okay, earlier the composition of retail loans was skewed towards home loans, or mortgages are they called. Today, the component of mortgage loans is far lesser than what is for consumption. So we find that more than almost 50% of the loans are being used for consumption purposes. Okay, and that is, when I say consumption, it means borrowing to pay for items of daily consumption, grocery shopping, goods. This is a disturbing sign. One, as the Indian public becomes more indebted because they are borrowing more. On the flip side, if it was meant to create assets, it was okay. But it is not going to create assets. It is going towards consumption, which is disturbing. And we also find, because of the higher indebtedness, the savings rate of India is coming down from 34%, has come down to 30%. And we are lagging China now as far as the savings rate goes. It's very important for us to maintain a good savings rate so that contains our current account deficit and eventually helps our currency. If you think a little deeper about this, why is the Indian public borrowing to pay for consumption? It obviously means that affordability has come down, wage growth has not been good enough to cover inflation. Okay, it definitely points to a massive gap between what they need to survive and what they're earning. Okay, if this doesn't change, if wage growth doesn't go better, if we don't get more jobs, I'm sure this will have an impact on consumption in the long run. The government of India is doing, trying to create more jobs, and but the tariffs imposed on India by US is not going to be helping this cause at all. It's going to be challenging to create jobs in this environment. And I'm sure the will is there to improve the manufacturing sector in India, because that is what creates jobs for us. It will take time, and we should just be patient and to let it happen. Okay. The SCO meet in China was a huge head turner. Photographs of the Chinese premier along with the Indian Prime Minister and the Russian premier huddled together, cracking jokes and having a good time and holding hands, has rocked social media across the world. But most importantly, it is sort of focused attention on the fact that there are a set of very large countries who can get together and oppose the hegemony of the West, of the US in particular. And I do think these photographs were meant to create this impact in their minds, and it is, I think, having its impact with some amount of rhetoric turning. Okay, and so now we have a good cop and bad cop happening. All these days it was only bad cop happening against India, and today it is good cop, bad cops. Maybe it could turn a little bit in India's favor as we go ahead. But India continues to buy oil from Russia. It refuses to listen to the US. Oil prices have dropped, okay, because of concerns on global growth and higher OPEC production. Okay. One of the unseen agendas of Trump is, I think, to keep prices high so that the US oil companies will benefit. And that is what has also been driving his agenda against renewable energy like solar and wind, for whatever reason. But he wants American oil companies to benefit. He also wants India to stop buying oil from Russia and instead buy from America. Same reason. And now he is pressurizing EU to stop all their purchases from Russia and instead buy from America. And actually, the terms that were entered into between the EU and US, as far as in their negotiation to reduce tariffs on the EU, there was a commitment by the EU to buy large quantums of LNG. And it just seems that they don't have those resources to buy those quantums of LNG. Let us see what happens as this comes out and how they're going to try and cover it up. Okay. Coming down to this, in very interesting article about Bharat Forge. We know Bharat Forge as a large engineering company, one of the largest in the world as forgings go, and almost all their revenue comes from exports. Yes, they have been suffering because of low export growth in this environment. But the unseen story that came out in today's article is how they have been pivoting towards defense. Not just defense, they've always been there in defense, but they're creating entire platforms and systems around the forgings that they make. Okay. As a result, they have had to go towards robotics, AI and electronics, IoT, etc. to create these entire systems around the defense equipment that they make, including robots. And the picture here is rather dramatic of Baba Kalyani along with robots that look like dogs or wolves, if you may call them. And they're meant to be helping the Indian armed forces do their work. So while defense is a play that has been spoken about across the last few months in all channels, we should note that the orders are still not growing the way that companies anticipated. For example, as the article notes, that the shipyard that L&T has is right now underutilized. Even the capabilities built by Bharat Forge for defense are still underutilized. So there's way to go there, and let us see what happens in this. Of course, to note clearly, as it says, the forging business accounts for nearly 80% of Bharat Forge revenue. Okay, and defense is really yet to pick up, but I think this is a pivot, and over time you would see Bharat Forge becoming a much larger defense player than it is. But what is interesting to see how Indian companies are embracing technology and looking at ways to change their business models to adapt to the new conditions. Again, a fun fact, these were the statistics in one of the week's newspapers. It had brought down the import and exports of India in the year 1951, almost 75 years back. Okay, and in 1951, our trading partners were still America and the UK, and we also had Pakistan as a prominent trading partner along with Australia, etc. It's very interesting to see what were we trading on. Our primary exports were gunny bags, sackcloth, some fabrics, okay, and our imports, raw jute or raw cotton, some machineries, okay, rice and flour and grains. These were this is what India was trading in 1951, and today it is so different. We are exporting engineering goods, we are exporting technology services, okay, we are importing equipments which go to help our economy in a major way. So this is a far cry from what it was in 1951. Our total exports to the US amounted to 187 crores in those days. That is all. And UK was a little less, at around 100, 120 crores. We've come a long way, my friends. We've come a very long way. And I'm sure there's a much longer way ahead of us. But yes, we are surely progressing. Have a good weekend. Thank you.